All right, today on Talk Tickers, we're digging into a real head scratcher, Coda Octopus. They're a pretty interesting company in the underwater tech space. So they just dropped their Q3 earnings, and on the surface, everything looked great. But then the stock just tanked. So what did Wall Street see that maybe the rest of us didn't? Let's get into it.
And yeah, this is really the heart of the mystery, isn't it? Coda Octopus comes out and beats what the analysts were expecting for both revenue and profit. I mean, that's supposed to be a home run, right? The stock should be flying high. Instead, it did the complete opposite. So the big question is, what on earth happened? What spooked investors so badly?
I mean, look at this. It just lays the whole puzzle out right in front of us. On the left, you've got the good news, a solid beat on the key numbers. But on the right, ouch, the market just hammers the stock, sending it down 7%. This kind of disconnect is exactly what we're here to unpack. Okay, so first things first, let's just establish the facts. To really understand why the market was so disappointed, you've got to appreciate just how good these headline numbers actually looked on paper. So, the company posted revenue of $7.1 million. Now, this easily beat what Wall Street was expecting, which was somewhere around $6.16 million. That's a beat of almost $1 million. That's a really strong performance on the top line. And this wasn't just a beat against some analyst guess. It was a sign of some real momentum. Revenue was up a massive 29% compared to the same time last year. I mean, by any standard, that's a company with its sales engine firing on all cylinders. And that strength didn't stop there. It went all the way down to the bottom line. Their earnings per share came in at 11 cents, which was a penny better than predicted. So you look at all the usual signs: revenue beat, earnings beat, fantastic year-over-year growth. This should have been a great quarter. So if the headlines were so good, where's the problem? Well, as you know, the real story is almost never just in the headlines. To figure out that 7% drop, we have to pop the hood and look at the quality of these earnings. And here it is, our first major clue. While that fantastic revenue growth is happening, something else is going on with their profitability. Gross margin actually fell, and it fell significantly, down 5.6 percentage points to 68.3%. In simple terms, it means for every dollar of stuff Coda sold, they were making less profit than they did last year. And let me tell you, for investors, that is a huge red flag. So why were the margins falling? Well, it's all about the business mix. Their main growth driver at the marine technology segment did great. But another part of their business, marine engineering, which actually has higher margins, saw its revenue collapse by a third because of some contract delays. So even though total sales went up, the type of sales was less profitable. Of course, on the earnings call, management did what management does. They focused on the future, and they painted a very optimistic, very bullish picture. They basically want investors to look past these little short-term margin hiccups and focus on their long-term growth plan, which is all about defense. And their growth story, it really stands on three main pillars. First, getting their DAVDIV system for divers out into the market. Second, innovating with their new, much smaller NANO Gen sonar. And third, just a laser focus on grabbing a bigger slice of that global defense pie. And hey, they are making real progress. The CEO, Anne-Marie Gall, pointed out a really key milestone. They've delivered 16 of their Diver Augmented Vision Display, or DAVD systems, to the U.S. Navy. This isn't just a test anymore. These things are actually going into the field to be evaluated on live missions. That's a big deal. In the market they're going after here, it's absolutely massive. The whole world of unmanned underwater vehicles is projected to more than double to over $11 billion by 2030. Coda's new little Echoscope Nano Gen sonar is designed specifically for these smaller robotic platforms, which could open up a gigantic new market for them. So, let's put it all together. On one side, you have a really strong quarter based on the headlines and a very compelling growth story from management. But on the other, you've got this underlying weakness in margins and in a key part of their business. This is the balancing act that investors were trying to figure out in real time. It really boils down to two competing narratives. The bulls are looking to the future. They see the huge potential with the DAVD contract, the new NanoGen product, and a rock-solid balance sheet with no debt. But the bears, they're focused on right here, right now. Those shrinking margins, some weakness in their rental business, and that big revenue drop in engineering. Ultimately, that 7% stock drop tells you exactly which story won the argument on that particular day. So here's the key takeaway. The market looked straight past that strong Q3 headline beat. It zeroed in on the uncertainty and the risk that those falling margins suggest. See, the question investors are asking isn't, how was last quarter? The question is, how profitable are you going to be next quarter and the quarter after that?
And that brings us to the next call, our forward-looking take here at Talk Tickers. Based on everything we've just seen, what should we expect from Coda Octopus? And more importantly, how do we rate the stock right now?
So, before I give you our rating, just a quick definition of what market perform means to us. It's basically our way of saying we expect the stock to kind of tread water for a bit, moving pretty much in line with the overall market. So, no big breakout, but no major collapse either. Just a holding pattern. And that's our call. We're rating Coda Octopus as market perform. The focus for the next quarter is going to be all about those margins. Can they get them to stabilize? Until investors see that profitability is holding up, we expect the stock to be pretty much range-bound, caught in this tug-of-war between its really cool long-term defense story and these very real near-term profit pressures.
The big question now is whether Coda's future growth can arrive fast enough to fix its present-day profit problems. That's what we'll be watching for. And as always, a final reminder, this is not financial advice. All of this content is for informational purposes only.